All right, guys, it's the moment of truth time for BTC as it closes in on the $100,000 psychological level, $11,000 down from the inauguration all-time high. That's just 10% away and $11,000 down. Currently trading at $98,000, putting in a slightly higher high than the previous top on the 2nd of May, and all of the swing bottoms continuing to hold up. That is the Gann swing lows, all holding up for now. We've got heaps to get through in today's video, along with data for the stock markets, taking a look at the overall cycle for Q2 and how that's progressing with another day up in the stock market, and some of the cult stocks, some of your favorite cult stocks. We have MicroStrategy to take a look at, one of our warning signs for the end of a cycle, and of course Tesla as well, plus some altcoins as well. So don't go anywhere, heaps to get through with you guys today. Link in the video description for the reports that have come out last night, this morning, and one more this afternoon. Heaps of those for next week as well. If you want those, they'll be in the top of the video description. Okay, so Bitcoin is pressing to new fresh highs as I'm recording here, 98,400. What I'm interested in right now is the resistance levels. How is the strength and weakness tracking leading into this top? And of course, where could those support levels come in? Let's quickly cover off the support levels as they haven't changed. 86K is the first of the lowest levels. The first of the highest levels is 92,000, and of course the swing lows that are forming around 93 to 94. This diagonal is also super important. These are the previous all-time highs of the previous bull market. So your 2021 tops projected directly off those tops. If you want to replicate that yourself so you have it on your chart, that's where this line comes in. And you can see BTC, since touching it and then closing above it on the 23rd of April, has not closed underneath that level since that period, putting in higher lows and also remaining above the important 50% level now. This is the level from the inauguration top to the tariff low, and that slice through the middle there is at 91,900. Round number, call it 92. So it's doing relatively well. But I'll get to the cycle analysis on this with the stock markets as we lead further into the middle of May, which is what we've been preempting for at least some sort of correction, maybe even just a slowdown in the moves. Now that's BTC. What we are yet to see, the moment of truth here, as I keep referring to, is because we're sitting on the 50% level now, 4.97% for USDT dominance. And if you'd missed out on yesterday's video, I'll leave a link to that at the end of this one. You can catch up there. Here we go, 98,600. The point from this analysis is on these occasions when Bitcoin begins to move higher, for a sustained rally, a sustained move, a big move like you can see with the orange line in the background, and you can compare these particular moves. When those moves occur, you need to see the US dollar dominance, USDT, that is, USDT dominance break down. We can get short rallies while the dominance remains above support levels, but generally you want to see the breakdown of key levels, and this is what we're trying to do, is identify those key levels for the breakdown of USDT dominance. So we start to see weakness or increased, a lot of weakness in USDT dominance. And generally, if you're still in a macro bull market, which I think we are, would see that money flow out into at least BTC. And as you can see with the Bitcoin dominance as well, that has continued to climb higher and higher. So it's unlikely that you'll see any sort of significant moves in the majority of altcoins. Sure, one of your particular altcoins might be popping off dozens and dozens of a percent, but just going through my average list here, not many of them are really doing too much. And that's because the dominance continues to climb. USDT dominance at the moment, it's getting very close to that point. At this point, it's still holding up here, and therefore the money is likely just flowing into Bitcoin for the time being. So a breakdown here, 4.97%. I've cleaned the chart up from yesterday. The other level is at 4.75%, and that is your overall 50%. So the all-time highs down to the all-time lows, slice through the middle is somewhere around 4.75%. So a break of those two is going to be even better for the overall space. But for the time being, it's probably likely just going to be BTC that's going to be getting these gains from the USDT dominance flowing out. Now, if you want another area for USDT dominance to flow out and actually use it, I partner with Cast. This is a crypto debit card. They're not trying to do anything crazy. It is on Solana, so if you like Solana, there's also a Solana ecosystem project. Essentially, it's just stable coins onto a debit card, and you tap, it does all the other work for you for zero fee. Now, it's cryptocurrency. There are always risks, and that's the way I choose to look at things. You might think that things are completely stable and never going anywhere, but I'd suggest having multiple cards or multiple accounts, just like I do with exchanges, because you don't want to have all of your money on one particular card or one particular exchange or one particular wallet. You just don't know what's going to be hacked. So I've got multiple, and that's what you see in the video description here. You've got Cast. That's the official link. You're welcome to not use the affiliate link. Go out and do it yourself, but that's the official link there so that you hopefully don't get scammed out there. And of course, Bybit's card there as well. Yes, with Cast, it is a cost of $20. But don't worry, you also get rewards back. So if you're spending 10, 20 grand on your card, that's basically groceries in this day and age. 2% on 10K is going to get you $200 in rewards back. And remember, this is a 0% card. You're only paying fees on the ATM. So check it out. Cast is in the video description there. I thought it was a good segue because we're talking about USDT, and USDT dominance is dropping. The lowest price today, as I record, 4.99. So very close to this 50% at 4.97. Moving on to cryptocurrencies, and this is going to be the title of another video coming up. Something, I don't know, I'll come up with something. Basically, it's at a very key low right now because you can see Bitcoin's search volume is at 17 and the crypto search volume this week is at 8. And this was the low, the exact low from last time, October 2024, before it broke out the week after with the election. It was the same Google search trends volume there. Crypto at 8, Bitcoin search was at 17. It boomed from there. I'm not expecting that it has to boom from this point. Of course, we don't have an election that could do that. But even prior to that, that has been a pretty key level. You can see the previous lows for Bitcoin and crypto going back to 2023. This is September and October again. So October 2023, Bitcoin at 16, crypto at 5. So it was a touch lower. Bitcoin's at 17 now, then it was 16, and the week before, 2 weeks before, was at 15. So it can go slightly lower and remain there, keep grinding around while the interest eventually returns. But ideally, you don't want to see this search volume go too much lower from that point or remain there for too much longer, because that could lead to a longer decline for BTC. Well, it's popping right now, 98,800, getting close to this top here. The next resistance, 99,500. The point about the search volume is that we'd likely, if this keeps going with the price, you start to see people flow back in. The search volumes will start to tick back up. And if we take a closer look on the shorter time frames here, say the 90 days, you can see Bitcoin has started to slightly tick back up. It's at 36, and just a couple of days ago, 4 days ago, it was at 31. So a nice beginning of the increase here of that interest coming back. And guess what? Interest typically comes back right towards some sort of peaks. Not saying the game's over, not saying anything like that. You know, we did see the interest come back in November, mid-November, and the 20-odd of November, which is still around 92 to 98. Sure, the market went a little higher, but basically the extent of the move was over. The extent of the move came from August, and just looking at your percentages up to that point where we had the extreme greed. That's basically where we measure our extreme greed. You've seen already 86%. And from there, when the retail comes back, they're looking at taking just, I don't know, peanuts of the entire move. You know, one quarter of what they had before, the 80% up, and now just 17, 18% from there. So that leads us over to the fear and greed. Let's bring that up. And in terms of time frames, now we have 60 days from the higher low. What I'm looking at for here is a potential time frame for the market to test new fresh all-time highs. Still looking out for a couple of these dates here. 60 days takes us to about mid-June. 90 days takes us to early part of July. We know that tariffs have been paused from this area, April, for 90 odd days, which takes you to about July, around Independence Day. Previous cycles have worked on similar timeframes as well. You can see from the peak greed, so that's the peak market sentiment, dropped around 140 days to this high low. Here's 5 months from peak market sentiment, that whole greed thing. You can see again, the greed came near the top. It's not the exact top. This could keep going on, push a little bit higher, and then you just need time for the greed to wear off. And another thing with the sentiment, we're starting to see that with the stock market as well. It's finally hit 3 days in greed after being so long in extreme fear, and of course leading into neutral. But just finishing off on the market sentiment for BTC, pretty similar pattern is repeating yet again. A long trend to the downside, a recovery period which has lasted 2 months in the previous case, from the low to the higher low, and then another month or so to climb out into fresh highs. And that's why I'm watching a 2-month window and a 3-month window, obviously 60 and 90 days. And for reference, we can also look at the timeframes from the exact low as well. And that takes us out to May. So even if things pop off here, test some new fresh levels, 99, 100,000, even those levels we've been watching for the 50% extension at around 104, would still be waiting for any sort of correction here after that extreme greed starts to take hold again as another re-entry opportunity, ideally consolidation above 92K being the 50% level, and that would then put in your wave 2. So we'd have the wave 1 out of this low, looking at that wave 2, leading into that final big, what we're in now, the big wave 5, which takes us to some hefty numbers. Now, the next thing that needs to turn around is the exchange volume. So we've got this positivity building in the background. We're just waiting on the sentiment to pick up, the trends to pick up, people to be searching for it, and of course the exchange volume as well. This has remained around 30 billion now for the last couple of months, still trading around here, putting in lower highs, lower lows. It happened last time. I've repeated that on the channel. So until we see a breakout, what we're looking for here is a breakout of the highs. That's when we can start to get excited to see that, well, maybe more money is back and we're about to break out into new fresh highs. Speaking of which, the total crypto market cap is about to break out to new fresh highs, sitting at $3 trillion today. And on the 2nd of May, it just touched $3 trillion as well. The ideal close is above 3.02 trillion, which is your 50% level. So the total crypto market cap is obviously lagging BTC. Bitcoin's in a stronger position just based off the charts. Oh, and as I see my next chart here, it's dropped to 4.98. So bit by bit, we're getting this 0.01% move to the downside. Total crypto market cap obviously is lagging here because of its cryptocurrency counterparts. ETH is barely keeping up with BTC. You can see ETH USD is holding ground here at 1840, so 1,840, and it's lagging BTC. So ETH BTC continues the downtrend at the moment. Really no breakout here of 0.019. The numbers still to beat this low back in Feb, where the market basically broke down from, and it's still not come back to retest it. So you're really looking for some closes above 0.023, 0.024 to get on that more so bullish side of ETH. The narrative is still around Ethereum is going to be the next big thing, and it's going to be the next thing to blow up. It's just has to do it. It doesn't have to do anything because that's what buyers are suggesting here. They are not suggesting that they are ready to finish dumping it and then go into an accumulation, which is required to then push that price back up, basically take it all off the market. Volumes continue to drop off. Markets continue to drop down, but doesn't mean we have to not watch it. It's still on the radar here, as is SUI BTC, which has pushed higher and is holding above the 50% at 3,200 Satoshis. As for the USD, it's at 350, so it's above its 50% as well, so 290. Solana, 150 bucks. Still just below the 50% level, but it's holding out. So provided it gets above those swing tops, then it's back into that stronger position. Sol BTC has also just hit a little double top here. So you really need to see that start to base out at around 0.0014-ish, 148, and then start to climb higher to put it back into a stronger position to tackle the next 50% level above. XRP is still holding above the 50% at $1.80, so that's a good sign. And then the major 50% is at $2.50. So out of those three, XRP is in the strongest position, SUI next up in the next strongest position, and Sol third place, just out of those three, looking technically on the charts here. Now, one other thing I've been following with XRP are the timeframes of the major moves from a significant low to a significant high, back down to a significant low. And throughout its history, it's done pretty considerable 1 year moves. You've got lows to highs, 390 odd days, another 390 days. We're looking at, again, 364 days, so basically a year. So I'm tracking anywhere between sort of 360 and 400 day moves for XRP. The interesting part here is that that comes in around July. So if we start to see a move higher and a break to new fresh high prices, be watching these time frames, as it's done that pretty much its entire history. Doesn't mean it has to be the end, but I very much caution to be on the lookout for some extreme moves leading into the end of that cycle. And it can be pretty decent. You can see the previous move, even in 2021, after, this is what the SEC did here, after the SEC rulings and hearings, it still ran into a nice strong peak. Its move in 2017, one of the biggest of all time, ran into that peak as well in January of 2018. And then most recently, we had the 390 days from 2022 into this peak of 2023. So some nice, 360 to 400 day cycles here, which have also lined up pretty well with Bitcoin's cycle. So something to take a note of there. Speaking of cycles, let's get on to the stock markets and a recap of this signal that came up, a month ago now. S&P closes at 200-day low. The point of this is I want to revisit the data and just see how well it's tracked into the future and whether it's something that we can continue to rely on. Otherwise, we scrap it and move on to something else. But these have held up very well. S&P 500, after closing at a 200-day low, then a greater than 97% of stocks go up. So basically, 97% of the 500 stocks went up the next day after the S&P closed at 200-day low. So basically a massive, breadth thrust dump, huge pump. 1 month later is where we sit here because the date of this one came out 10th of April. Today's the 8th, so just short of 30 days. Let's take a look. We have 1 month later, 80% of the time, the market was higher. Did it happen this time? Yes. 2 months later, again, 78% of the time, it is higher. 90% of the time in 3 months, 6 months from that point. So this is in April 9th, April 10th. So look at 3 months from that point, that's going to be July. Then we're going to look at 6 months from April, that's going to be October. Let's look at April next year. Basically a 100% hit rate. So it seems like things are going to be higher next year as well. Now, the next thing I take from this data is suggesting that we are not like 2008, nor are we like 2015. So we have to look at a particular cycle that is going to be similar to this time. I've got my 20-year cycle. It's looking at 2005. Now, if you're unfamiliar with Gann's work, I highly suggest it. It's something I've been using now since 2010, and it has done absolute wonders for long-term investing, short-term trading. If you have any money in the market, Gann is the man to go with, especially if you're looking at longer-term cycles, even for real estate, your stock market. So that's what I'm referring to here. And Gann focused very heavily on a 20-year and a 60-year cycle for other reasons we can get to in the future, but they have very important significance, it's the same word, right? Very significant cycles to follow for your markets. Now, the 20-year that we're tracking shows that May will have some sort of top, a local top, and then a local low. Very strong evidence to suggest that we're going to see higher prices by the end of the year. And in terms of our cycle analysis, there is even further evidence here, the one that I put more attention on, that we're going to see higher prices towards the end of the year. But this middle section, quarter 2, quarter 3, is still going to be quite volatile. And this is a look at the cycle overlaid onto the S&P 500 as we had another couple of days up here. You can see the move higher, basically into May, maybe a little spike out here into early June, but this is where the price action stalls. So it could be anything ups and downs. You'll see highs and lows in the day, but in terms of closing prices, maybe that's where things grind out, possibly similar to 2020. We had this big low, and then we had multiple consolidations out of the basically a V-shaped recovery. You got to April and then May, consolidation out of the V-shaped bottom, another consolidation through June into the higher low in June, Then it broke out in August, another severe drop in September and October. So again, consolidation. This was basically COVID 2.0. That's what the news was telling us. And then the market broke out yet again into that final peak a year and a bit later. So the S&P has been following this pattern pretty well on point. The moment of truth is the 5,700 now. We're going to break above this to tackle 58. That's going to be some pretty good strength above those levels. And any corrections above the 50% of 5,500 points, still going to be very much on the strong side of the market. My lowest levels now are around 5,100. That's that previous swing bottom there, 5,135. For a strong pattern, you wouldn't want to see the price action come back and go underneath these lows, basically close underneath these lows. You can see it with history. This was this significant Japanese yen carry trade. You had a higher low following your Gann Swing Pro. You guys know the deal. There is a link in the video description. Get your indicator suite. That's where this comes in, and your swing indicator that we use for all of our trading. The higher swing low is a very, very important level. Check it back in April when we had the scare from the Middle East crisis. You know, this was more wars, more bombing going on, and the market said, we still see higher prices, and the price put in higher lows subtly, but it still put in higher lows and then broke higher. So that's why I'm very much watching each of these significant higher lows that formed out of the extreme confidence, business confidence breaking lows from the tariffs. That's going to be the key levels, 51. And for the NASDAQ, you're going to be watching around 17,700 with a daily low here at 16.7. But this is your first area of interest, 17.7. So speaking of tech stocks, let's take a look at MicroStrategy now. It has completed its double bottom price target. So low to high to low, look out to 150%. There it is, 404. The peak came in at 403.90, so 15 cents off that top. And that top almost lined up dead on with the January top. So it's still just short of the January top, and still got a daily close above the 50% level, coming at 387. In terms of time frames for the end of BTC, end of the cycle, we're still watching. Doesn't mean it has to happen. I always have to put that in. 100 days out. So that's the current day. 103 takes you to August 2025. Similar to previous cycle. So the pattern's still playing out pretty similar to the last cycle. However, slightly stronger in this case, as it's made it back to its January high. So that was about 2 months after the top. And you got February to April, again, 2 months from the all-time high. That's the current all-time high. There's the January top. And the price action now, 100 days out from the end. That was from last cycle, November. We still don't know if this is going to be the end. But 100 days out from that point, you can see this higher high, but it was only higher to June. So just to this area, it didn't get back to that April top yet. So this was slightly weaker. It was still trading underneath the 50%, whereas this time it's slightly stronger. So that's great news for the cult followers of MicroStrategy. Better results this time than there was last time. And you'll want to see that continue on. The way you'll see that is if it continues to close above the 50%. You can see previous cycle, this is 2021, it didn't get above the 50% level, put its all-time high, dumped to the low, and then couldn't break past the 50% level. Ultimately, the 50% level calling the lower high, getting absolutely rejected and then destroyed. This time, provided it remains above here, you're in a slightly stronger position. So hopefully that's going to help out to the end of the cycle, maybe get back towards that previous old all-time high. But of course, still needs to get back above the January high and the December highs at about $440. Speaking of cult coins, here is Tesla. It is above 270. So that's exactly where you want to see it, above 50% and above all those previous tops. So if it can consolidate here, it's very much on the stronger side, and you've got 350 to tackle next. And of course, get back to those previous old all-time highs. And as for the US dollar, it continues to hover around 99, exactly what we've been watching out for after it broke down to a significant 3-year low. You can see here 37 months, 33 months, 38 months. Previous time in 2017, 2018, broke to a 3-year low, and it held out for a couple of months. Again, it broke to another almost 3-year low, held out for another several months. here we are again, breaking to a 3-year low. At the moment, it's been holding out now for the last few weeks. Keep watching this, keep watching the US dollar. Now I have more on the 10-year yields leading into the end of the cycle. So basically moving into the peak along with the bonds and of course the interest rates, which were paused. Now, of course, some would have said I should have led with that, but it paused. It's been paused for ages. We've talked about that. I also talk about it very often on X. Link is in the video description. Go follow me over on X for more timely updates. And I'll see you guys at the next video. Thanks again. Take care. Peace out.